Okay, I'm going to try to build a non-directional hedge script. It's going to buy at the market and sell at the market. So this is a master script because it has all the different kinds of entry styles. It has 3 versions of buying and 3 versions of selling. So you're either selling at the market or you're going to sell on a stop below where you're currently at, or you're going to sell on a limit above where you're currently at. The only problem is that should you design a script where it's too tight at the apex of this entry, you're going to not get filled. You may not get filled. Now, even on a market order, you may not get filled, depending, in the old days, a whole 5 years ago, they would requote you like you couldn't even get a bad price. They just wouldn't fill you. So everybody's competing, and it's just funny how they blame these high-frequency traders when they're the ones that are bringing everybody, even the poor guy, lightning execution at this point. So I don't get this whole war on technology, but I guess people want to still go back into manufacturing. That's another thing you hear too. Manufacturing is down. Well, of course it's down. Who's got to manufacture any? We're all going to a more intellectual world. Sorry, we're not cavemen. I mean, you have to have a man cave, but it doesn't mean we're cavemen. So unfortunately for the Luddites, they're all running for cover, I suppose, at this point. Because, gold's going down and stock markets are going up. What are you going to do? Okay. The idea that there's some reality that's supposed to be imposed on, no, you know what? The past is never like it. Well, they say it rhymes, but it never, the past isn't going to, there's no template for a crash. So, unfortunately, the stock market's going to explode to the upside. Gold will probably come back to 1,000 or some nonsense, or 1,100 or 700. And there you go, right? So, and all you need to do is have something like Trump wins, and then people say, see, that's what happened when Trump wins. He's manipulating gold down. You can just hear it now, right? You can just hear the echoes of clickbait. Anyways, I don't like a sidetrack, but this is I try to post this. I guess I've got to find some stupid cloud to park these files. I guess I'll try to make this a comment. If I make this a comment on my own video, I can post all these code characters, like the 2 forward slashes. That's my switch up at the top of this. If you turn that off, if you delete those 2 forward slashes, it makes activates the ticket. So each ticket can be a different thing. So I guess you probably want to get out a pen and paper and draw some type of logic map for how this stuff really runs. But if you just want to buy and sell at the market, I sent some guy a buy and sell at the market. And I think I sent him one of these. I'm assuming he knows how to edit it. He didn't say anything. But, it's the thing. I couldn't sell this stuff because, if you blow up your computer, and you could loop. If you put the wrong prices in here, it's just going to loop. In other words, if you put it'll actually compile here. So if you compile this, and it'll say, yeah, you're good to go. Problem is, if you put a stop in that is above your entry, if you're going to buy, if it goes 5 pips lower, but you put your stop at 2 pips below, and you take profit, if that's inside of this, it's not going to make sense to the broker. So what will happen is some brokers would reject this one, go to the next thing, and because it's missing, because it had this hiccup, if the broker is too slow in grabbing the orders, then this thing will actually have time to loop again. And I've never changed the sleep setting down here. So I don't know how to code any of this. I'm just basically driving a car, and I know that if I don't put gas in it, or if it's got crude, right? I mean, I do know a few things about these scripts. The inside these quotes is what's going to show up on your platform under the comment window. And in the original version, it just said some comment. And this is the arrow. You can take it or leave it. If you put a comma and then the arrow, you're going to see a entry point on your screen, or you're just going to see the order. If you delete this, you just see the order. So if you're going to hedge this thing right out of the gate, because you want to lock in during a low volatility, there's a lull in the market, and you're going to lock in. Now, the lower the volatility, the more you would want, the bigger you would want to trade on that, right? The other way to do it is to put on another order with a little bit more risk. So maybe the first one has a 5, the next one has an 8 pip stop, or maybe it's Fibonacci stops, 5, 8, 13, 21. And knock yourself out. But as long as the 21 stop is going to make 34 pips, or 55 pips, or 89 pips, you know, what have you, the Fibonacci, not the percentages people use, but just the good old series. 144 pips, right? 144 is 9 times 9, right? Or something like that. I mean, this is the Gann grid stuff. And in a perfect world, the thing's going down at 45 degrees in your chart, you know, or up. And you've seen that actually happen lately. Amazingly, it's happened on these markets. The thing just literally, I mean, other than the hiccups every hour, it literally closes every hour at a 45-degree angle. I think it's just a drift after an explosion. Like if you smash something down and it just drifts, it just floats up like a dead body off the bottom of the, you know, it's like the guy that went off the diving board and he didn't account for a shallow end, right? So he hits bottom right and he just drifts up. It just reminds me of that. Not to say that's what the, but yeah, it's the shallow diver bounce script. But you know, the other way to do it is kind of a passive entry where the market's dropping and you're putting these buy stops and you're locking in, you're kind of ratcheting into the fact that we just keep compressing down. And the moment that turns around, you want to be involved for at least the first tickets of scalp. But this is where the problem comes in. To really do it right, and this is a sad thing about anything, right? To really do it right, it'd be like, I don't know if you've ever done anything, you're saying to yourself, well, let's do it right? Just do it once. Why keep remaking it and just fucking up all day long? And going to a loop where it just like, if this script's wrong, it just keeps looping. And I've had it happen, so you don't want to have it happen. It just kept stacking up orders, stacking them up. Next thing you know, market came down, tagged it, and you're in way bigger than you ever thought you'd be. And then you're put to the gun to the head. You're actually up on the trade. Should you just take your money and run? And you're thinking, well, let's see how it goes. Give it another 40 seconds. It's fluctuating $100 every 40 seconds. You're like, yeah, I don't know, it's only $400 in the account. Let's see what happens. So you could be at $1,500 at the end of the in the next 6 hours in Forex. So never turn down a chance to. But you really want to plan this shit out. I mean, you don't want to just jump in with a huge position at the market because. Gosh, it's such a naked position too. I mean, a hedge at least, you can tell yourself, listen, I've locked in my profits and losses. There is going to be, in other words, whichever way it goes, I want to be involved in the drama, but I don't want to have to decide which way it's going to go. I care less. Now, it's very disturbing to people that you would get in a cab and the guy says, where you want to go? You go, Honaker, let's drive around. They're like, what's with this customer? He's paying, but just ride. But that's it. It's a destination-less trading. The destination is in the hands of fate. Of course, you can make speculations it's going up. I mean, if you see a pause in the market after a big move up, it's usually going to continue in that. That's why people are tricked by Head and Shoulders, because they, oh, look at this, a Head and Shoulders. But maybe it's a triangle. Maybe the shoulder is the apex of the triangle, so maybe it's going to keep going up. So here, I'm just going to do a simple version of what it would be like to turn this into just a pure raw hedge, and then the next step we would just add on to it. As soon as we add one dimension to it, now it's kind of a whole nother fork in the road, stacked on top of what we're already doing. So that could be a problem, right? Stacking too many possibilities on top of the system. Let's see, I gotta get this thing queued up here. Okay, so here is basically, if you turn all the switches off in here, immediately this thing's not activated. So there's so many orders in here. Like, you can add as many as you want, as many as your broker can take. I think I got them all in here. I should have an open cell. I'll just have to make that, I guess, from scratch. But yeah, so let's just take this and we just copy this line. And you could make buy blue and sell red, and it's a bottomless pit. Naturally, that is the other problem with this, is once you discover the power of this thing, you're like, oh, well, you can do anything you want. Yeah, that's the problem. So you got to pick something. And I always had a problem because I always wanted to pick the best thing. Oh, I mean, what's the best thing to do? And it's just like, what's the best trade? If you're looking at your chart and you just get stuck in, that loop of looking for the ultimate, you know. So the ultimate may not come. If you're a perfectionist, you know, you could be in trouble. So if I just put the word sell here, I should be able to fix this up. I think that's how it reads, sell. Oh, they already see that pops up to kind of help you. That should work, right? See, it's okay. But now you got to come in here. Now, this is I've never really figured out the best way to do this either. Is that, well, you typically buy the ask. And if you bought the bid, you'd actually be buying the ask anyways. But I don't think it's going to reject it. But you should buy the ask and sell the bid. So you should make this bid. And if the spread's floating, then it's different than if the spread is fixed. With a fixed spread broker, which they're not always the best kind of broker, but because it's a wide spread. But the thing is when you're running a robot, you might want to have a fixed pit broker, because a fixed spread broker, because they'll take the ticket, they'll take the orders. So you're paying kind of a high thing for that luxury. Now it opens this thing right here. It opens a 10K at the market. And I would never make that a 10K if I had a micro account. I just make it the smallest possible. Because you're going to stack this up. You don't want to, like, every half hour you could pull the trigger. And this way you're getting in different volatility ranges. This is kind of a weird way to trade, because you're not picking a direction. The reason you pull the trigger here, and I would make a different script for the next half hour. I'd make a half-hour script, a 15-minute script, 6-hour script, 4-hour script, but maybe a couple different 4-hour scripts, maybe one that has tighter stops, wider stops. You need a reason to launch the tighter stops. So you're going to have to pick how much work you want to do. Ultimately, you're on the 15-minute chart. You see a 5-pip bar. You press a button. You're in. Wait, you're in. It makes money. You get another signal. You press the button again. Or you press the button once and then you wait 30 seconds, press it again. I mean, if you're looking at the 5-minute chart, the 1-minute chart. But you have to have different ratios, because you got to be able to make the 8 pips. If you start stacking up too much crap with the same stop, then you're not turning over your inventory enough, and the stuff's going to go bad on the shelf. The market's constantly fluctuating up and down, so press the button, and the next ticket has, now this has an 8 pip stop here, and this has to say above the, if you're going to sell the bid, it'd be above the ask. So I'm not even counting the spread when I write these. I would add the spread to it later, and that was another problem, was when you go to name it, if you say I'm risking 50 to make 50 pips, or percentage here, you want to describe it here, that you're buying a 01K, then you're going to, if you're really, are you going to do this for what it really costs you, or you could put what it really costs? And sometimes, you know, the market's crazy. You want to have a wider stop. So this has to be above. When you sell at the bid, the ask, so you have ask is going to be above. So this is your stop for your sell, so you have to be 80 pips above. So the spread's built into it now, but it would be, it's really like a 10 pip stop, even though it says 8. Now, the same thing on target. Now, if you want to double your money, you're going to make 160 pips. I mean, 16 pips, right? So 16 pips below where we're at. Let's see if we take profit. And this is going to be 1,600. That's too much. Okay, 160 here. And this would say sell at the market. So depending on how complicated you want to create the master structure, now you kind of have to think ahead a little bit, because you can just keep on duplicating this one. You create a master script that you can spawn off. All you have to do is turn the switches on and off in this master script. Put maybe the market orders on top, all the stops next. And if your broker's really slow, you see these things launch one by one. Broker's fast, they'll just go in a rush. One of those evil high frequency brokers. So at this point, I'm just going to leave these both black. I don't want to get carried away in red and blue and all this stuff right now. So we have to make this 60. I screwed this up. All right, so this should be about right. Let's see. We have we got to get out at the bid on both ends here, and then the ask here. So we're going to actually put this above the ask. So that's pretty much a volatility hedge. And then at the market, and then you could take the same script and copy it, and just copy along all this other stuff with it. It's all turned off, so it's just keep on cloning that. And then here you're going to come in with the next one, and you put maybe a 10 pip stop to make 20 pips, and just go on, and maybe describe it here. But the point is that you have a central starting point, right? The kernel of the whole program. I mean, this is what they build, the very first thing, and whatever you make a solid version of that, then you got like a main bottom of the pyramid to build all the other variations on top. So it's like a real a bottom up thing, and you can always shift it. You could put it on a different broker. You can export the whole file, copy it, paste it. There's no magic in the script itself. You have to employ it. It has to fit the material. So you're writing you're basically making a scenario movie. You're painting a moving picture of what you think is going to happen. So if you think the market's going to plummet 50 pips in the next 2 hours, then you put a big pile of orders, 50 pips, and to 100 pips below with, say, a 150 pip stop. Probably the most liberal, aggressive entry that's possible, I would think. I think it's pretty severe. It was the first idea I had was based on anger trading, was to, let me just turn on the, so this is compiled to be a entry, just a locked hedge, boom. Now, if you get filled on this buy, you'll get filled on this before here, so if the market's moving, you will lock in a win or a loss when these actually truly execute. Now, if you go down to the buy limit stuff here, so if you wanted to combine this to save a hotkey or just save effort, you could turn on, okay, just if you added one more ticket to this, all of a sudden, what you could say about it is that if you turned one buy stop or one buy limit on here, that it's kind of biased to the upside. In other words, it's a hedge, and all of a sudden now it's biased, slightly biased. So as soon as you do that, then it's a whole different kind of story. You know, you're not, in this scenario here, you're sitting at the train station, and you just go whichever way a train's going. You'll just end up in the next town. As soon as you turn on, say, this buy stop, so to me, this would be kind of a trend trade, this one. Turn this buy stop. And now the other option is, if you don't mind a bunch of hotkeys, you turn off these market orders, put a forward slash in front of those, and just go with the buy stop. Now, buy stop here is going to buy 2 pips above the ask, and this should be bid here. But that's not the reason I would never sell this stuff, because I would never give somebody something that's all fucked up. I mean, and even at that, like if this said bid like it's supposed to, you got to think about the fact that when you launch this thing, if the news is breaking, I fucked that up. So the news is breaking, they're not going to fill these orders. So you can't get, I run this thing right to the edge, so I experienced that kind of freeze on, well, just the lack of the broker catching up with all the stuff I'm throwing at them. So I had one broker one time said to me, I said, why'd you turn off my platform? They said, you're placing too many orders. And I really was. The thing got caught in a loop, and it was freaking out their server. So what are you going to do? So here, risk 70 to make better than double your money. Of course, you're getting, this stop is a lot wider than it looks. It says 7, but it really means that it's 9 because you're overpaying by 2. So this is actually 9 pips of risk here, even though it says your stop is 7 below. So you got to realize that too, that if current price is sitting at this, like you are here, you know that map where it says you are here. So here's 0, here's where the market's trading right now. If you place a buy stop 2 pips above, and your sell stop's 7 pips below when you drop, it's the total of 9 risk. And now you're looking to make, so this is a trend trade entry in my opinion, well, from the people that want to buy stops. It's nearly a market order because this is only 2 pips above. It's really a market order. A lot of these brokers now, they'll let you trade inside the spread. That means some brokers tell you, no, your order's got to be down here for a buy limit and up here for a buy stop. Well, in that case, just trade limits only. Like if your broker is screwing you on the spread, then screw him back and just get in on limits. It may seem like you're never going to get filled, but if you don't feel like that, if your broker is giving you a bad spread, just buy at the market with a limit below. So you're in here and you've got a limit turned on. So the buy stop stuff, I think it's okay if you, when the market's really dead in the water, and maybe some of these say 5 pips. You've already given yourself a range, right? The market's like this. And if these guys start stacking up, and don't forget, if you keep on dropping it, they're going to be kind of like about 15 pips in the end, because if the market's here when you drop it, they're going to stack here. When the market comes here and you drop it, they stack here. But if they're evaporating over time, and of course that's the whole point of this, is that they evaporate over time. You don't want to stack up an endless amount of stuff, right? This is like Mickey Mouse. You know, you slice the broom and all of a sudden he's carrying, now you got 300 brooms because you try to kill the broom with an axe. So this buy stop stuff, but if you want to feel good, that's a feel good trade. I'm just going up. I got triggered long. Of course, I've seen them go up 2 pips and rip back 4, right? So it all depends. You know, markets never. I mean, I don't know anybody that's getting into the market and that goes their way for the next 10 minutes. Like, if you can do that, then wow. I mean, without pulling back 1 fucking pip, not even a half pip, right? 2 pip pullback, is that possible? Yeah. Buy 1 at the market and buy 1 2 pips below. So that's the other option. Turn this switch off. And so another thing is, how do you name these things? So I guess that's personal preference, you know. This could be called symmetrical hedge at the market, 8 pips stop to make, you know, you can run that all day long. Very tight stop though. So on a 4-hour chart, maybe this is a 15 pip stop to make 30 pips, right? But as the market's marching along, and you keep pulling the trigger on that, you just kind of want to try to fine tune it as much as possible. I mean, the more time you spend, I guess the realistic world is 24 bars a day, 24 hours a day. Well, you can already eliminate the insane candles. I mean, if it just moves 60 pips in an hour, that's 10 pips. It's a pip a minute. You know, maybe you don't want to put a hedge on. Wait for it to pause a little bit. Whip out these tiny scripts, 8 pips, 12 pip stops. Maybe the whole platform is designed around this. You don't have any limit orders. That's another way to go. At least you can track the performance. Now, this is a whole nother problem here, is commingling strategies on one account. May not be the best idea in the world. You may make a bunch of money, but I guess if you're worried about the analytics and somebody asked me about the rate on return. Well, as you can see, it's all over the map. I guess if you don't lose your home, you're doing good, right? If you just, it's like that Alcoholics Anonymous, right? It works if you work it. So you really need to decide psychologically whether you want to go non-directional or directional. Now, in directional world, you realize there's pullbacks, so you're still in a thing where you're, you know, before the pullback, you locked in a hedge and maybe you rode that back. It may be difficult to switch gears. I remember the first time I was trading both styles on top of each other. It's like if you're doing those, you know, these people do impersonations of like John Wayne doing some other character. And there's this overlay. It's very funny if you understand the reference of both characters, how that, you know, fits together. But that's complex right there. I mean, that's basically your... it's complex in the sense that it's a script, but man, it's only good for certain ranges, certain scenarios. So really, when the market is going ballistic to the upside, I'm thinking sell limits in front of it that are wider and tighter stops on this, or selling at the market, with just tight stops to take something. But if you don't have any of these scripts available for the wild market, then you're just always waiting for it to just die down. And you can make a complete ton of money doing that. And, you can see the triangle forming on a 15-minute chart, on a 1-hour chart. It's a no-brainer. I mean, as the thing keeps on getting to an apex, now there will be a kick out. You could possibly crush some of your orders. But this is just like when you come home with something and you go to open the package and you can barely get the thing open without destroying the thing inside, because I don't know, they wrap this stuff like it's going to go on some, like it's going to be airdropped, to cavemen somewhere. I don't get that. I mean, with the first time I tried to open a CD, CD packages used to be like, we designed as frisbees. Like you could actually take the box, beat somebody with it. It still wouldn't open. CD might be a little screwed up. Those are good old days. But this is a bottomless pit. So you can put your sell stops in here, blah, blah, blah. But you're always selling the bid and buying the ask. And this is not set up like that. So this master script that I'm going to post is all butchered because, you're always going to build your own world. There's really no, you're going to want to name these your own name anyways. It's just that I never saw anybody trading purely scripts. Now, people build EAs, and it'd be wonderful if somebody could build an EA that could have I don't know if anybody's a bridge player, but apparently they have conventions. This is like having 10 conventions available, perfectly aligned, so no matter what comes at you, the bid comes at you. I guess a bridge too. So when that comes at you, do you have the playbook? And that's like football world. You got the playbook. So here's your playbook, this thing here. Now, the cool thing about this is I just ordered a tablet to run another demo. And double click. Nice thing with a tablet, I don't think a lot of people realize that less is more when it comes to trading. Like, if you're trading on a 1920 by 1028, or even one of these 4K screens, you may not want to run MetaTrader on that because you cannot zoom in. MetaTrader, unless you've got a hardware zoom on top of like an eyeglass, but then when you do that, now you got to bring on another app to just like scan and pan, and I've been doing it for years with Matrox and all this pan and scan, and that may be just a little bit too much, right? That's just like you're in your car and you're looking out that dumbass TV that they decided to put. Somebody decided, we'll put a camera on the back of your car and then display it on the dashboard. I got in somebody's car recently because my car is a good old-fashioned manual. And I get in this car and I'm like, oh my God, what is that? Is that like? And then guess what? We almost backed over a tree because the damn camera apparently it's not wide angle enough. It's not a fisheye. So I looked out. I was almost hit that tree. So it's not all it's cracked up to be. But in the world of MetaTrader, the thing is the tablet is 800 pixels wide. And here I'm running 1376 by 768 or something. I'm running what the equivalent is to 1920 by 1080 because I want to see big, giant bars. So all my charts are zoomed to maximum zoom. So if I'm trading these stupid candles, I want to see a hammer. I only want to see 5 bars back. I don't need to know. I don't care about I'm just in the market for the next 15 seconds or 15 hours. 15 minutes, hopefully. 1 hour, boom. Goes down, goes up. See you, bye. That's my favorite trade. I don't want to hear about it. And then just before it explodes, right? So you see the pent up tension and it explodes, boom, you're out, and you can have limits to go the other way. That's the ultimate. you lock the hedge in before it. When premiums expand, it's options trading. When the premium expands, you get the hell out. And then you would sell calls and you would sell options. You'd sell them against, hopefully against a real collateral thing that you own. And then you dump, and then you get back in, so that it's really like rush hour traffic. It's really weird in the morning. I kind of watch the morning news here, used to. And I notice in the morning, they've got the time on the TV. Like, it's almost like the horses at the gate for the horse race. And in the afternoon, you notice the time is not on the TV. Nobody cares. They're like, yeah, you know what? Day's over. I don't care. But in the morning, man, are they all tense. So you can see the market tense up. Everybody's jockey for position. Market goes on Wednesday, goes new lows, new highs, goes ballistic. So what do you do about it? And that's the question. How do you make money from behaviors that happen over and over again, like Asian sessions quiet? Everybody knows this. How aren't people making money on the breakout of the Asian session? Well, maybe they don't. Maybe they feel like, well, I feel like is that I feel dumb if I place buy stops and sell stops on the outside of 8 hours of behavior. Only because I'm like, gosh, I mean, what if they trap me on the outskirts of this? What if this wick is not a breakout, it is just going to come back to fair value, come back to the center? So if you're going to buy, like say this script here, which is nothing but a, I'd say a low volatility entry idea, then you wait for it to come back to the center, and then you nail this script, and then you can place buy limits and sell limits on the outlying from center of fair value. This way, you're also non-directionally trading it. So you could have, say, this. I've tried all variations, trust me. A variation would be, say, buy at the market, sell at the market, boom. Then turn on the sell limit that is a sell limit that is, say, 20 pips above, and it's got a 5 pip stop. Buy limits. Same thing, symmetrical. So what it would look like is, just by hitting this one button, you hedge these out with, say, a 3-to-1 ratio. So maybe you're going to risk 10 to make 30 pips. And if you totally lose, you're going to lose 20 pips if they bang it both ways on you before you see your profit. So you're doubling your risk here. But see, if you lose 16, you'll break even. They chop you here and you only cash out on one leg. Worst case scenario is they just chop you out. It never makes it up. It just goes like this and it hits both stops. You never see your profits. So, always a risk. Actually, I've never done one of these trades. I guess I could stop you out both sides of that. So you're flat. At least you're gonna lose 8 pips. You know that. They come back the other way without hitting target. Yeah, sadly that's how it happens. So you get chopped, and so as I guess I said, there's no panacea. Now, if the market's cruising up like this, and you'd rather be putting in sell stops below with sell limits running in front, no market orders. That's the other way to go. Or just pure limits. If your broker sucks and his spreads suck, and you know it, you're going to run nothing but buy limits 5 pips below. Forget, screw him. And you probably get less fills, but when you do get filled, you just kind of ripped him off, I guess. Not ripped him off, but you got the best price in the world. You probably even get a better price than you get on your other brokers, because the ones that let you trade at the market with tight spreads, you're unless you really have a lot of I guess discipline, or what they call it, it's easy to pull the trigger because it's such a cheap trade. So you're tricked into over trading at the market with tight spreads, whereas a bad broker forces you to really be as cheap as he is by putting your buy limit right on the edge. And of course, if the spread is fixed, the only problem is when the market gets down there, it's going to vibrate really hard to make up for the lack of spread, or for the lack of them being able to expand it. So it might stop you out anyways. So that's another pitfall of trading. That there's shipping costs involved, and sometimes your stuff comes damaged. But that's just how it is. Here's a progressive kind of martingale-ish type of thing at the bottom here. Just a bunch of buy limits getting bigger and bigger. It's kind of a soft stop, 55.5 pips all the way to here. So this one, the bottom, if you turned on everything in here, I can't imagine what would happen. But I guess if the ratios are okay, it really depends when you drop it, though. Some of this stuff wouldn't even fill if your stops are too tight and spreads are wide when you press the button. Of course, this would be something else if you turned all these tickets on. So you could have a single button for each thing. You got 72 hotkeys in MetaTrader to program, but I've actually used 3 for take all profits, close all open and pendings, and delete all objects. So 3 are taken for just standard. And I think some of it's already chosen by, although I think you can override the hotkeys that MetaTrader already has programmed, I think. Like when you choose a hotkey, you can, it will go for that one first. Sometimes it'll get confused, but I'm running a Cherry keyboard G86. It says it has macros running on top, so I'm just using a button assigned to because otherwise in MetaTrader you have to hold down the control key and hit letters A through Z and numbers 1 through 10, and hold down the Alt key and do the same thing. You can't really, you still got to hold down. It's a 2-finger execution. On the tablet, it's just a double click as long as you're in the common area of the. Anyways, I hope that doesn't bore you to death, but that's what it's really about. Is if you're going to build a car with 12 cylinders, it's going to run smoother. I don't know why they did that 12-cylinder jack. I guess it's supposed to be a cylinder show off, but I don't know if that makes it any better. 8 cylinders, maybe more power. But more angles, more diversification, the better. And so, that being said, as they say, that's the latest hook. If you had this script, say, with the 8-pip stop, which currencies could you run it on? Well, right now, just because of the spread being tight, it's as if the volatility of the euro dollar is kind of, it's just a very low volatility currency. And on the right side, I got the euro against the yen, which is pretty wild. And so imagine you're on, this is a monthly chart, imagine you're on the half-hour chart and you're trading at the market with these guys. And this is based on if you're going to trade 2 currency pairs. So you're looking for low volatility. I'm just going to go horizontal on the on this. And this is a 10-pip grid. And the big round numbers here is 100 pips. So what this is, and look how this thing respects the 100-pip handle. Come on, give me a break. Here, you never made it, but wow, within 10 pips. Nuts. If this thing was treading water, and I guess you could go to the 4-hour chart, but it's not entirely necessary. This thing stalled out in a 10 pip zone. If you just kept pressing, you're looking to make 20 to 40 to 50 pips. If every time this went down, you put a buy stop in, or you could put a hedge in, what have you. And you could also be taking profits. If you're like, it's not going anywhere. But look at how long that took. Now, you're kind of, if you go to the 4-hour version of this, which now you want to zoom in, max zoom in. Because now, that really is 4 hours. If anybody's got that kind of patience. Look at all these small 4-hour candles here. So when you got a small body, you buy and sell at the market. Small body, buy and sell at the market. So you can put your hedges on here. Like this is hedge. Every 4 hours. Boom, 100 pips. But not the same script every 4 hours. Maybe you have this script. Of course, in that situation, I guess it doesn't matter. You can pull the trigger here. Of course, you maybe want to wait for a different price to pull the trigger here and let it stop you out. If you're looking to make 100 pips, you probably got a 20 pip stop. But you're also not going to get stopped out of the kind of... so let me zoom in here on the scale here, just so I can dissect the actual cost of doing business on this. At least this way, the yen's going to be in a different phase than the euro. So if you're going to flip to your next chart, so imagine this is coming at you real time. And this is just binary mechanical trading. You don't need to have any... You just have to be aware of what 10 pips looks like. 20 pips, maybe. A 20 pip bar. It's all squirrely on me now. So make sure I'm at the same point in the chart. So what is the... Say we're looking for a 20 pip over the period of 4 hours. So here's an instance. Buy and sell at the market. Buy and sell at the market. Because one of these, they might have chopped you. So was there a trade on this? This one, the signal. So here's a signal here. Buy and sell. Buy and sell. Here, it's a lot more risk. Right, 20 pips. Actually, I'm missing the grid. Doesn't come down that far. Let's do pip for pip. These are smaller. This is less risk. This thing's always going wick style. So if I was trading the euro, and this is where it gets complicated. Another reason why you may not want to try to take your script and go to different markets, different currency pairs with it, because some of these markets really are better with limit entry for the range trade pairs because the wicks are so big. So this monster move here, as this is going up, the euro yen dies out, but against the dollar it's a complete bloodbath. Then here is your put on a hedge. Not during here. Although I don't know what would happen during this phase when it's going straight up 4 hours. It's got to be a pretty rocky road there. This is the end of the session, the follow through drift. Here is a hedge lock in. There's a 30 pip winner. So you have to have a 10, 15, a different smattering of stops, and maybe you just kind of say, well, this is actually a very small candle. I'm going to run the tighter stops on this 4 hour than here, but there's a directional view of that The last known big move was up, so all the small moves are considered to be pullbacks. Of course, until they're not, right? Until it really falls off a cliff. And here was the Climax move today. They went up into this 30 pip window. And that's like what I said in the other video, was that is the classic trap. Trap them up here and then pull it all the way back. That's a 100 pip, 75 pip pullback. So at that time of day, was there a trade? Like here was an entry of a small. So here you put on hedges here. You made a lot more money on this hedge. See, that pullback was huge. With this pullback, now non-directionally trading both of these, because this one actually went down. This one kind of went down, but you made up for it on here. So if you like, this is really isn't too fair because well, no, this is right. Yeah, so this small thing here, but this is actually a smaller candle. Here you could lock a hedge on this spinning top here. You just to get the thing. This guy goes down quite a bit of pips, and this guy goes up. See, it didn't matter. So, but you have to realize that if you look at your account and wonder why you just got chopped out of your euro to the yen, and you didn't get chopped out of this, it's just because this is more volatile. The spreads are worse. The spread closed at 10 pips here. The spread closed here at like 3 pips. See, the ask is the white. That's a 10 pip grid. You just know by looking at that the spread's 10. It's brutal. So you'll make more money here, pips, but you're paying more. The shipping's higher. Just within these two currencies. Now you could go dollar to the yen and euro to the dollar. Then everything's pivoting off of that. I mean, in this setup here, you got the master, you got E as yeah, I got the E here to the dollar, and the E goes the yen. So the thing is, if you had the dollar, if you had E to the dollar, and then you have dollar to the yen, it's a whole different kind of world. At least with this, you can see that when the euro is, you're only one deviation away. I think it's a lot harder to look at the euro to the dollar, dollar to the yen, because, well, the base currency is not the same. You're not pivoting off the same center point. Where here this is center, and here's the fork. Whereas if it's euro to the dollar and then dollar back to the yen, it's kind of a more of a circle than a fork. Well, I don't know. It's just, it looks different on the chart because you kind of have to think in here in terms of like, well, what is the euro winning against? In the other scenario, it's like, well, what is the dollar? But the chart's upside down now because the leading currency is not the it's not dollar to the euro and dollar to the yen. So you can't make the dollar the base. So psychologically, or at least if these were both in an uptrend, if you put a moving average on these guys, and they're obviously both in an uptrend, but which one has the best entry at the moment? And just between these two, you could go euro to everything else. Go euro to New Zealand, make the base against all these other pairs. Not pairs, all these other actual currencies. So that's a view, that's a central out view. The other view is you just throw a bunch of symbols up, which I did in my weekly, which that's quite a bit like playing chess. I mean, you got to think about, well, that's the knight, it can hop, and this is this, it can do that. I mean, you know, it's made to be too much. And if you're not psychologically prepared to wait for a 3-day swing trade, then you're doomed. If you take it as a scalp, And you're not going to get filled on some of this stuff. I mean, you're going to have stapleton entries. 50 pips deep is about 50 to 100 pips deep, 300 pips deep maybe if the news was coming out. But other than that, there's no way I'm waiting. Like if they don't fill my order in 8 hours, I'm going to ride what's there. Like I'm going to just, they say, come with the date you brought or something. Even though they hand you deals, you just, if you're going to trade this stuff, you can't determine market conditions. So you have to adapt to the market. So right here on this thing I'm looking at, you know what? I'd be on buy stops on the euro to the yen, and I'd be at buy limits, and you have to buy at the market here, put a hedge on. You got a small candle. Same thing on the other way. Now you could go non-directional on both. The only thing that's going to get you in trouble is you press the button too much. And don't wait for the market to die. So if you don't wait another 3 hours for the market to really die, like you think you lost your connection, sometimes these markets are so dead, you're not sure if the servers crashed. That's why it's good to have more than one broker so you can arbitrage off the other broker too, take advantage of them during the news. NFP comes out. Of course, everybody's on their game today. I didn't see any lag in the NFPs on servers, but there was a couple months ago when, I don't know, it was pretty funny how slow some of these brokers were to the data stream. But those are just kind of lucky things if you have a chance to take advantage of it. But yeah, this volatility breakout system, I mean, certainly if you have a window, and that's another reason why you don't want too many bars on your screen. In fact, if you're really going to do this, I just did it stacked like this so I could do a blow by blow. Like, imagine you just put your hedges on here during the small bodies. This is a small body. And you just take the punishment, right? Let them stop you out, let them chop you up. But this one made more money. But in the normal, I think the normal world, you would run these vertically so you could see the pip depth on the thing. You could see the market depth and say, oh, look at this thing. And less bars too, because you're just trading bar by bar. You don't have a structure view of the market. And that's not always a good thing. Like look left, there's fucking nothing to look left at. And if that's going to distort your view, it has nothing to do with your system. You may have a restaurant that is a fish restaurant, and the guy down the street has a hamburger restaurant. You cannot be distracted by his his steaks that are being cooked. If you're a fish place, you can't feel like, well, I'm missing out on all the customers that eat beef. No, you just got to do the fish gig. So, looking back into the chart, I guess here, you're not going to zoom out. You just hit the daily. And you're like, oh, I don't see anything. Oh, here you go. So there's definitely wicks, right? And this is the trap I was talking about, is they trapped it and pulled that back off of this. You can't see it here because you can't see that they pulled that down and then they went back up. You can only see that on the 4 hours. This big crush. So they pulled it back to here. So that's your structure. And if you go to the, you see, they pulled it back off this wick. So they took it up here. Was the first punch, and so you're scalping on the weekly chart really off the wicks. So for the 4 hour, the first breakout was here. This wick here they took out. And then you had the big monster. This big monster breakout here. Pull it back to this top. But it's about grabbing that, pull it back. A little unsuccessful too. But look at these. Man, you knew something was going to happen bad. Look at these. Wow. So you only had a few places to get long this guy. So these are 20 pip stops. 5, 10, 20 max. And you're out of your sells and you're on the longs for another 50 pips there. Or you just trade this for the long side only. Buy stops, buy limits, no market orders. Just keep pressing the button. Let them fill you. Maybe buy at the market. Buy at the market, buying limits. But you don't want to always be getting in on these hedges because you're still going to get kicked out of one leg. And you may not make it up. This may not make it back. So you want to diversify if you can. But yeah, the pips are a problem with every currency pair, and some of these currency pairs are so choppy and so ridiculous. Like when you look at them, you just have to say that is literally nothing but a limit order's dream. You can't even imagine trying to, because the market's going nowhere essentially. Like euro to the pound, I guess it's going up, but it's such a choppy ride. It's very stair-step-ish. So that's another consideration. But yeah, 4 hours. It depends how your broker is going to compress that data. The other option is to go the 1 hour. Here you're looking for a 10 pip. It's 20 pips. You see, you get more 10 pip. Here's almost a 10 pip. But is that trade worth it? You gotta have those 5 pip stops to make 8 pips in there. Otherwise, it's not. Because there's a lot of fussing and fighting to get through that. The other option is to zoom out and look for patterns like triangles. So if you're in the 1 hour, instead of going the 4 hour, you're just like, oh, I see zigzags. Okay, put me a hedge on. And that's 10 pips of garbage. Now this is like a structure pattern trade, because you can see the triangle forming or the head and shoulders. It doesn't matter. Triangle, head and shoulders, same thing. And whether it's ascending wedge or descending wedge doesn't matter. So earlier today, this big plunge here. You could have bought that, dumped it there. Bought here, got stopped out. But this was a lot of pips. The other thing might be difficult psychologically is if you're looking at this, hey, this is going up, but it's a euro. But see, this I'd have buy stops running. This I wouldn't have anything. Maybe buy limits down here. But then it gets complicated. You might want to have 2 separate accounts. You got a euro yen account. You got a dollar, US dollar, euro to the dollar account. Now, every time you add another component to this thing, if you're really going to be a serious trader, you're going to want to accommodate all the different variations that would make you more money. Because in the end, if you know how to build a I guess these are kind of robots in a way, or build these templates that you can launch, then it's going to be better to have otherwise once you have the master script and you start to clone it, now you've got a lot of different tools. You got a metric set, you've got all the different tools, tweezers, everything you would need to make money. Because if you're a person that fixes stuff, you got to have the Phillips screwdriver. You have so many versions of a screwdriver. And this way, when you get something you can execute, you're done. You're not searching around trying to force a tool to do something that's too small. It's the same thing in trading. Try to force a trade with a tight stop, you keep getting kicked out because you don't want to risk anything, or you think if you go to the 1 minute chart, somehow it's going to be easier but the problem is, as soon as you go to 1 minute chart, unless you're on the euro, all of a sudden you see the spread and you're like, yikes, you mean I've got to literally make that up? That's the whole chart on a 1 minute chart. I mean, look at this. If I go to a 1 minute chart on this currency, I mean, you have to ask yourself, who's making money here? It's in a 10 pip range. The spread's 10 pips. If it was like that, you barely make anything. It's not going anywhere hard enough to... Look at this. Are you kidding me? You got to be limit trading this. That's in the 5 minute chart. If the spread stayed at 10 pips, I don't know if it does. But it fluctuates. If you're in and you see a big wick, you know, the spread could have been big during that wick. Look at these wicks. 10 pips of pounding here. Boom, 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 boom. It's going to be realistic. Look at this thing hover right at the 100. Look how many hits there. You had to tell me the 100 pips way better than fib. But here, if this market was open right now, buy stop, buy limit, buy limit, walk away. Maybe buy one at the market for good luck. There you go. There's 4K now. Maybe there's a master stop here. This one takes a profit here. This one stops here. Stops here. This takes a profit here. They're all biased to go long. This makes a profit here. This makes a profit here. Master stop. Now this is going to make a profit here if the master stops down here. So if you bought, say, limit, one of them is a scalp, one of them is a big move. Buying here, plunges, throwing limits in, capture that. Just knowing which key to hit when. If you literally have sell stops stacked up here like a goofball, and that's what these markets are for idiots. Just think about that before you think that you need a fucking Fibonacci tool. Look how dumb this shit is. Takes that out, boom. Comes back to the scene of the crime, ba-boom. Cuts through these like butter. Traps people here. Ba-boom, the sellers come in, bam. Oh, see you buy auction theory. Come back to here, supply zone. Kaboom. If you're putting on a hedge every 15 minutes, and finally they stop you out, or you're lucky enough to see that this is here and you just keep putting the sell stops, you picked up, cover here. A lot of people are going to buy the dead can't bounce here, or this is the shallow diver in your swing pool. Goes back to this and then kaboom again. So yeah, the yen was kicking the euro's ass, but yeah, I had to go separate accounts. Seriously. Because if you commingle this stuff, if you have available margin, you see this thing stacking and be like, you know what? Let me just put another buy stop up. I got enough margin available, because if the other currency is all of a sudden making money, or say you want to close all pendings, but you don't want to close the pendings on your other currency pair, let's get out of this thing. So just take and open up a separate account. Just trade one. If you had trade 22 pairs, you'd have a different pair for each account. You should. That's what you should do, right? It's like when you get that stuff, and they say, you know, you should change the oil. You should. I'm like, yeah, you know what? That's for other people. I'll just buy another one later. But some of this stuff actually is important to do the right way. So if you care about it, I guess. But yeah, it's crazy. And then there's always the single drop order style. Everything I just showed was hard written to just launch a scenario. When you take these single drops, which I think I put in that MT4 Trading Google MT4 Script Trading, I posted some of these because it's buried in a bunch of spam now. I just don't know how to create a cloud of this stuff. But these single drops are just well, they're hard written for the stop and the take profit, but the placement's all drag and drop, so wherever you put it is where it goes. You can't just double click that. So on the tablet, if you're running these doji scenarios on the tablet, you would just double click one of these and it's going to launch it. You can drag and drop it too, but these will actually employ the whole thing. Boom. So, also buy stops and sell stops. You could run those separate. And the limits, now, just before the news comes out, you may want to run super deep limits on the high and low. But yeah, a lot of stuff, you know, I don't think you could ever backtest it. You cannot launch this stuff inside of MetaTrader during the playback of the strategy tester. So you just have to grin and bear it. Realize that the ratios you picked, you limit your losses all the time. In other words, you're setting your loss to a financial, something you can tolerate financially, not something you can tolerate pip-wise. And then after that, it's just about behaving enough not to think that since the account has a bunch of money and now you can get a little reckless. Well, you could get a little reckless if you had, say, one day I was experimenting with a buy stop technique. So the market's plunging, and I'm talking about 80 pips in about 8 minutes. Whoosh. And it didn't stop. This euro's selling off from, way up there. 117. Last time we were up there. And it looks like one of these days where, it's just going to bounce. Well, you know, if you look at the big picture, it was just a gigantous retrace. Like on this chart right here, it was one of these things. Like, we climbed this wall of worry up this channel, right? Got this beautiful channel, and then whoosh. And then it'll go sideways, and then everybody's like, And there's a stop here that gets triggered, and the next thing is bash. And I don't even think it did like, now if it did one of these bounces, this is like 30 pips if you kept on pressing the buy stop with the buy limits here. You could have made money on that bounce and never got filled for most of this. You can stop down your limits, but assuming you waited an hour, and but as this is happening, and you know this is going to happen, you really got to be sitting there nailing that button. I guess that's the only pleasure. Is as that's dropping, you're like, let me count the pips. As soon as we start coming in here, I just start buying really heavy. And actually, I'm like, cash out here, reload. Never got the full retest, but maybe you got a stop button, a market hedge button, and a limit button. That's it. You're always buying 10 pips out in front of the market. Maybe you're never getting filled. But I do think you got to trade about as many tickets as you can handle. Because this way, you diversified your entry style. You can have ratios of, I'll risk 15 pips to make 100 pips. 8 times your money. Stuff like that. That's what I think you want to make 8 times your money, right? Because sometimes, if you're getting stopped out on these tight stops, and they just keep on stopping you out, what I've noticed is after I tighten up my stops, I was like, now, the only drawback with tight stops is that you're going to feel like you're missing out because you're like, you know what, I want to swing trade this. I mean, I realize I'm going to have to take some punishment. Say you're in a super light position and you have a super wide stop. It doesn't look like, I'm not in big enough to, like, this thing's going to turn around. And I don't know if anybody can see what's going to happen, but I think we all can see what's going to happen. It just takes longer than you think, or maybe it takes shorter than you think. But you're like, yeah, it's going down, but not forever. Right? So it's not forever. Also, sideways, not forever. And up and down, not forever. Right? So the market's going to die out. So coming next week. Now you could also back way away from the market and hand place orders into dense areas that you do look back for pivots on a monthly chart. That'd be Stapleton style there. But they don't do that. They just put one order in. They might say, oh, look at, let's just jump in here impulsively. But I just don't know how people ever amass a lot of percentage win. Like, you should be making, come on. If you're not making 10% a month, maybe you should quit, right? I'm thinking 50% a month would be kind of a target. You got to be making 50% a month. Like, if you got $10,000 in there, don't you want to make $5,000 a month? You got $10,000 in your account. You should be able to be. I mean, come on. It just adds up so quickly, and it just bursts up. It's not a consistent amount of money. Some months you're going to make 20 grand. Some months you're going to make 5 grand, 3 grand. Maybe you lose a grand a month. If you're losing a grand a month, you're going to have to ask yourself a couple of questions like, how dumb am I? I don't know. I guess you have no trading system, right? You're just guessing with wide stops. Guessing with wide stops, yeah, you're asking to get, especially, well, even moving your stop, right? Or how about no stops? There's not enough money in the account to justify a stop. You're like, yeah, let's just get in here and see what happens. So I made tons of money from putting $50 into an account and just making, I just made $300 without stops. Done that. Also done the opposite, trade without stops, $300 and lost that in the same period of time. So the stop thing is a kind of a, well, it's I don't want to say that it's like you're giving up on the trade. Like, if you put the stop in, they stop you out. It's like, okay, you're no longer going to be coming to the show. You've been blacklisted. I'm sorry, you're just no, you're not the kind of people we're looking for. So it's very kind of, you could take it personally, but in a hedge position, I guess you don't have that kind of risk as far as saying, well, I knew we were going up or I knew we were going down. So you don't care. So that might be the answer. And then some of the answer is that I guess you just don't trade at all. But I guess on the daily chart, if you're looking at 10 pairs and you only place orders at pivots, there's not a lot of trades. But I guess there's at least a couple pairs to trade a week there. So, and the weekly stuff, maybe one trade a month. Right, that's just mind blowing. Look at that, like 2 months up, right? You can see the setup on the weekly. It really depends, but yeah, you can make 1,000 pips. Right? People say, I made 1,000 pips. I'm like, yeah. If you got the time to look at all those charts, that's another thing. Not only the time to look at a chart, but how to size the order to the up and down motions and behavior of the market. So position sizing and or the ticket sizing and ticket placement and ticket style, and all of a sudden it's complicated. But this buying naked at the market or buying at the market, I always figured those are scalps because if you really think it's going up, there's going to be a better price. They're going to stop it before they rip it up. Same thing on the sell side. If you're looking to sell, the sell is above you. It hasn't happened yet. To say that we're going down right now at the market, wow, you better have, I guess if you're doing it on the clock, every hour you buy at the market, just buy every hour. So it's 3 buys. It may work if the market's starting to just settle down. It may even work if the market's plummeting, if you've got a wide stop. So I used to do that when I didn't trade with stops. Market would plummet. Well, I could buy one. See, I blew up the account. I took $50 to put it in the account. I blew it up. I said, well, okay, this time I'm not going to fall for that. I'll buy one at the market, and I'll put an order down deeper to buy on a limit. And if that doesn't get filled, I'll just keep buying every 4 hours as it's tanking. And sure enough, I wasn't in too big, and sure enough, it retraced, and I had $150. So $200, right? Put $50 in, make $200. So, and the next thing you're thinking, kind of replicate that? Yeah, if the same scenario showed up and you did the exact same thing, but that scenario is probably going to be more likely to happen in another currency before it rehappens on the currency you just traded. But the problem is on the other currency pair, that pattern has a spread that's so wide that if you expect to use the same amount of margin, and that currency may cost more, so you're using more margin just to buy that currency. Because if you trade the New Zealand dollar, you can buy a lot more New Zealand dollars than you can buy British pounds. So using up margin that way too. So staying on one currency pair, at least you can build a style of entry. And then later on, of course, you can see the styles don't really translate. Buy stop entry style may not be the best choice for a widespread currency because you're just kind of getting clobbered. Better to, find the cheapest way to get into the limits. But that's just how it is. I mean, it's not, I wish it wasn't like that, but I wish there was no spread. If there was no spread and no commissions, there would be no shipping fees. It'd be like you could buy stuff and it would just show up at your house. Yeah, no taxes, no shipping. Well, I mean, it would show up, but I mean, it's free on board or whatever they call, but I don't know. So I'm going to post comments. I'm going to make this script the comments on this video. And I don't know if you could dig through it. I suppose, in the end, it would take, I guess it's just how far you want to go. I mean, if you want to, and actually you can just keep going. It's not like you can ever get done with it because you can always find new ways to make money. Like when you go to the grocery store, they have the candy. I don't know if they do that in Europe, but we have these grocery stores, and you're standing in line. So we got all these little knickknacks, all these things that breath mints, candy bars, outrageous magazines, all these kind of like slightly essential things of life, and they're all stacked up there. And that just reminds me of orders that are 5 pips deep. They're right there. You're so close to the execution. You're going to the register, and they're going to rack you up. And do you want to pick up a few more things before? You want to raise the... I can see these little kids grabbing stuff and kind of like choking mom's credit card or whatever people are using to buy stuff. And they really prey upon people. Talk about manipulation, right? Well, we know you're standing in line, and everything's right there at eye level, and I don't know if people are stealing that stuff because it seems like it's a pocket level too, but it's funny because you don't see that in the aisles, It's a very dense, elaborate pack, and if you notice, the candy bars are sitting in their factory outfits. They're kind of 10 in one pack with the logo on there, whereas when you go in the aisles, all the stuff's on the shelf stacked up. You don't see it in the just off the boat stuff. So that's kind of funny. Yeah, it's just funny to see how they kind of a gauntlet of stuff for you to be tempted by. And the same thing with the markets, tempting. And some people are, I notice some traders are bearish just all the time. And some are bullish all the time. So if you're a bearish trader, every down move is going to look like, hey, you know what? I'm missing out on that. Really wish I would have sold that top. And I guess it could have to do something with pessimism. I don't want to think that everybody that's selling Of course, there are some people that are maybe like bisexual, that they can buy and sell without any regard. I guess binary trading is the concept. There is that you just are flipping a coin, and it does work if the spreads are tight. I don't know if they do in the options market, Forex option things. I keep getting spammed by these Forex options people, and what you got to understand there is it's nearly impossible unless you can trust the broker, and who knows what the time decay formula. The problem with options is you talk about complicated formula that's happening behind the scenes, the delta, this, the that, the Schultz option model, right? I mean, this Black-Scholes, is it? It's like this formula why the premium is what it is. Well, fuck what it is. I mean, just give me a chart of the premiums then. I want to see the underlying instruments. I just want to see the premiums. What's the cheapest thing out there? Hey kid, give me something cheap. So, get something cheap. That's what Forex is about. No commissions on some of these brokers. I guess it's in the spread. But nobody to call on the phone. Nobody to say, hey, can you... They're like, what do you want now? None of your orders have filled. You know what? We're going to drop your account. You're really an asshole. Why are you so sarcastic? You know, we're trying to fill your order and you're joking around. We don't... Stop talking to the customers. Somebody told me, stop bothering the customers. I'm like, oh, I'm sorry. Oh, I guess we can't be friendly here, right? I still wanted to call. I haven't called the corporate office yet to complain, but I'm like, seriously? Who are these people? And you should have seen this guy. He's right out of central casting for a New York deli. This poor old Jewish man, and his dad apparently is taking naps. This is at a Napa Auto Supply. They're charging $99 an hour. I saw their fee. Not $100 an hour. $99 an hour. And they're so slow that they take them 3 hours to do what another shop could do at $60 an hour. I mean, it's just mind-blowing. Plus, the guy tried to sell me a new part. I'm like, the part's a component part. You know, you don't need a whole new... what? But this is where the rich people live. There's another part of town here where people are so rich that I don't even think they know what the outside of their car looks like. They're just taking it as a place and go, here, whatever you gotta do. I can't live like that. That's why I'm building these scripts. I let somebody manage money for me years ago. They were a member of the Mensa Society, so they had a brain. Guess what? They blew out $25,000 of real money trading currency options. This was before Forex, and I said, "Oh fuck, I can do better than that." So at that point, I refused. Actually, I originally refused to let anybody manage my money when the first time a broker lost money for me. So I thought I'll do it myself, and the thing was, that's the way to go for some people. Do it yourself because at least you know why you're losing. Like I couldn't have a clue. Like the argument is that say you are a plumber and that's how you make your money. Well, when it comes to finances, you just turn that over to somebody else because that's what they do for a living. So they must be really good at it. Just like if you think you're a good plumber, well, just send me a good finance person and let them manage my money. They'll make me 20% a month. They should be able to, right? But if they're working at a brokerage firm, they're churning your account because they're just like, well, I'll take you in this, put you in that. And all it is back office is making money because they just put you in and out of stuff. And the commissions, the spread, the fees, by the time you get done, even if they're making 20% on their trades, by the time you get fee to death, you're making 10% if you're lucky with all the fees, and then they're going to take some of your profits because they're going to cash in on their genius moves, and we're going to take a percentage of your winnings. So why don't you just do it yourself? Well, some people got day jobs. But, the possibilities are endless as far as making money from home. Of course, you do need an internet connection. But this software doesn't even cost anything. MT4 is free, which I was astounded. I paid $2,000 for TradeStation. I paid more than that actually, because at the time you had to have a dongle key to have a password every month. You had to rent this trade station just to trade commodities, and you had to pay $300 for a data feed to be 15 minutes ahead of the public. So when I saw Forex, I just couldn't believe it. Like, really? No data feed? It's real time? I still didn't believe it. I was like, nah, that's gonna be a trick. And sure enough, I guess it was too much for the Americans, so they outlawed it. Because I guess the floor traders are like, wait a second, we don't have a job anymore? Yeah, that's right, because, you talk about geez. I remember having stops in the market not getting filled, and I could see it on my screen, and I'd said, I just traded below my stop. Am I still in this thing? They go, yeah, you're still in. Okay, well, I don't know. I'm just saying, I just saw a spike, and looks like it traded through my stop. No, you're still in. I'm like, well, thank God. I had to make a phone call to see if I was in some trade. You don't see this here on this MT4. You're either in or out. There's no discrepancies. So, I don't know if it gets any better than MT4. MT5, forget about it. What a piece of garbage. Can't even run a script. It looks like crap. I don't know what it is. It looks like Java. I guess I fell in love with MT4, although I still don't understand what pipe clients are. They added stuff to here. I mean, nobody talks about it. It's like some kind of underground. Who knows what the answer is? But yeah, MT4. MT4 is the way to go. Some guy asked me what platform to use. Oh, yeah, MT4. I mean, you can run these other platforms with their Java floating around your screen, locking up here. Boom, they're over there. You chase them with your mouse. MT4, you open it up. Tile the windows, please. Bing. I like stuff that runs inside the operating system. If it's looking to run on a another, like these kind of stupid retail brokers that have their own platform. It's one-click trading. I'm like, oh God, please. So you're going to appeal to the impulsive trader and just have him click all his money away? He didn't have the thought to put in a limit. And most people trade at the market. Just like when most people go to the bar, they're just, I'm in the bar, give me a drink. They're not sitting there waiting for the hottest, maybe they're waiting for the hottest babe to come in the place, but most people are just, they're in, And then they're like, hey, we'll see what happens. And it is gambling like that, but there's nothing wrong with gambling. I mean, as long as you have the ratio of risk to reward in your favor, and then got enough money in the account, enough bullets, right? Because you can afford to be wrong on small amounts of money if the ratio to how much money is in your account is good, right? You can be wrong. But yeah, it looks like to me next week is going to be euro, yen. I would buy this. I would always buy something else. See, that's my bias. But if you're going to go hunting for what to buy out of 10 currencies, pick the best buy. But maybe that currency is going to have some wild spread, so you got to be ready for the punishment that could be coming there. And I'll go with 1 hour here. Yeah, I want to buy this thing. My God, look at that. But see, they could take this floor out. This is what happened today. I had a trade on the euro where I had buy limits from here all the way down. And sure enough, it went like this, it went like this, and it went like this. So that happens all the time. And that's the scenario for this. You just lay a grid in all day long, let it fill, let it retrace. Buy grid, fill, retrace. Buy grid, fill, retrace. Buy grid, fill. Same dumb shit every day. Same thing on the sell side. Sell limits, retrace. Sell limits, retrace. Now here, your sell limits had to be shallow. Here, they had to be wide. How do you know? Well, when the ATR starts to get violent like this, next week, think deep. Buy limits. Buy limits down here. Buy stop stacking up here. I'll buy limits some scalps here. Sell limits up here. Sell limits here. But it looks to me like that's been stacking up. Just piling up. And the euro going to kill the yen. I mean, the yen's definitely got to be in trouble. So, and just buy limits, as you can see, look at this 100 pip drama. So if you're going to get in on the quiet things before the big move, here's the kickback where the sell limits would have filled before the plunge. But you're always running that also. So imagine you're during this phase you're running buy limits and sell limits. The sell limits don't fill, but the buy limits do. All your buy limits fill, not your sell limits, but you run both sides. Bidirectional limit trading, buy limits, sell limits, and you're getting a hedge in here. So you lock the hedge in. Damn it. Lock the hedge in here. Here's a trap. But look at all this money here. There's so much money. Kind of easy money. Not for a trend trader, though. They're pissed off. The people that think it's going down are like, God, I wish it would keep going. People that wish it's going up, they're like, what, would it go up already? Like, they're just torturing these people forever. And then, boom. Look at this retest of the high today. But I would say different account. So it's a separate account for that. Take your account. Or just switch currencies. Stop trading the euro. Move to euro yen. But be prepared be prepared to make and lose a lot of money. I've done it. When you switch to this currency pair, I'm talking about 100 pips. Up and down. 8 hours. Round turn. Look at this thing. Look at this. One day. Down 100, up 100. Down 50, up 70. This is Sunday night. This double line. Just imagine how kind of script it would be. And look, I just placed pending sell limits up here. Pending buy limits. Pending sell limits. Pending buy limits. Repeated pending buy limits. Smash and grab. Smash and grab. Smash and grab. Easy money. I don't care where it's going. Why would you care where it's going? Only fools care where it's going. Here's a structural entry. But it didn't matter. You could have sold it. You could have bought it. That whole week, everybody, the bulls and bears are always making money. The pigs get slaughtered, I suppose. The, you know, this trend stuff, sure, it's in an uptrend. What do you do about this stuff? This brutalization. Sunday night. Buyers come in here. They can only push it to here, then complete obliteration. Look at these swings. I don't even know. If you were trying to trade this from the long side, you could say, look at, yeah, but guess what? Guess what? Boom, here. And then this painful, choppy pullback, the final assault. Then we just kind of sneak away. The market just laughs at you as it just drifts up. And you could have been the guy that had a buy stop here, with your sell stop here, and you got in on this. And that was your whole trade. Or you just kept making money. I guess this is what I like to do. I want to trade this part, 80%. Yeah, I know there's these crazy anomalies, but 80%. So a lot more trades. Here's a 200 pip. 200 pips is nothing, up and down, 200 pips, nothing. It doesn't really go up till here. So what's the percentage? Look at that spike. Just crazy. Absolute nuts. Anyways, I hope that helps. I'm going to post the script here. You can play around with it. Launch it on a demo. Launch at your own risk.